In a harrowing episode that underscores the dark side of cryptocurrency culture, 2 men have been arrested in connection with the alleged kidnapping and torture of an Italian national in New York City. The case has drawn attention not only for its brutality but also for the suspects' ties to the burgeoning world of digital currency. William Duplessis, a 32-year-old associate of John Woeltz, surrendered to police on May 27, 2025, following the arrest of Woeltz, 37, just days earlier. Both men face serious charges including kidnapping, assault, and unlawful imprisonment, according to police sources. Duplessis' surrender came shortly after the victim managed to escape from a luxury townhouse in Manhattan's Soho neighborhood, where he reported being held captive for nearly 3 weeks. The alleged victim, a 28-year-old man from Italy, arrived in New York on May 6 and went to Woeltz's residence. Upon arrival, Woeltz reportedly confiscated the man's passport and electronic devices, demanding access to his Bitcoin account. When the victim refused to provide his password, he endured a horrifying ordeal that included beatings, electric shocks, and threats to his life. At one point, he was dangled over a ledge in an apparent attempt to coerce him into compliance. Upon escaping on May 23, the victim sought help from a nearby traffic enforcement officer who alerted the authorities. Police subsequently discovered a chilling scene at the townhouse, including Polaroid photographs depicting the victim tied up, as well as various torture implements and a gun. The gruesome details have prompted outrage and concern about the increasing violence associated with cryptocurrency transactions. Experts note that the kidnapping is part of a disturbing trend within the cryptocurrency space, where high-profile investors and their families have been targeted for ransom. A recent FBI report indicated that internet crimes, particularly those involving cryptocurrency theft, have surged, with reported losses exceeding $6.5 billion in the previous year alone. Woeltz, described in media reports as a prominent cryptocurrency trader known as the Crypto King of Kentucky, has a net worth estimated at around $100 million. His business dealings and lifestyle have attracted scrutiny, especially in light of the violent nature of the crime. Following his arraignment, Woeltz was ordered to be held without bail while his attorney declined to comment on the matter. Duplessis' specific role in the alleged torture remains under investigation, but both men's connections to the cryptocurrency industry raise questions about how far individuals might go in the pursuit of digital wealth. The case continues to unfold, with authorities emphasizing their commitment to addressing such violent crimes linked to the fast-evolving world of cryptocurrency. As this shocking incident reverberates through both the legal and cryptocurrency communities, it serves as a grim reminder of the potential dangers lurking in the shadows of digital finance. The implications of such violence could potentially lead to increased scrutiny and regulation of the cryptocurrency industry as stakeholders grapple with ensuring safety and security in a rapidly changing landscape. Future developments in this case may not only impact the lives of those involved but could also influence the regulatory framework surrounding cryptocurrency trading and investment practices. In a bold move signaling the growing intersection of traditional media and cryptocurrency, Trump Media and Technology Group (TMTG) announced plans to establish a Bitcoin treasury valued at $2.5 billion. This ambitious initiative marks a significant step for a company already navigating the turbulent waters of media and technology under the watchful eye of its founder, Donald Trump. TMTG, which operates the social media platform Truth Social, intends to finance the Bitcoin acquisition through a combination of $1.5 billion in stock offerings and $1 billion in debt financing from 50 unnamed institutional investors. This strategy positions TMTG to acquire over 22,500 Bitcoin at the current market price of roughly $110,000 per token. "We view Bitcoin as an apex instrument of financial freedom," stated TMTG CEO Devin Nunes, highlighting the company's commitment to integrating cryptocurrency into its asset portfolio. The announcement comes amid a climate of increasing corporate interest in Bitcoin, with TMTG poised to become the third-largest corporate holder of the cryptocurrency, trailing only Michael Saylor's firm MicroStrategy and the mining company Marathon Digital Holdings. This move is particularly noteworthy given the recent trend of companies adopting Bitcoin as a treasury reserve asset, reflecting a broader shift towards integrating digital assets into corporate finance strategies. TMTG's foray into cryptocurrency is not without precedent. Earlier this year, the company announced a partnership with Crypto.com to develop exchange-traded funds ETFs that would enable investors to tap into cryptocurrency price movements alongside traditional securities. This effort aligns with recent executive actions by Trump, including an executive order aimed at establishing a national Bitcoin reserve, thereby harnessing the potential of digital assets for economic growth. Concurrently, Bitcoin's market dynamics are also evolving. Data from CoinGlass indicates an impending short squeeze with over $7 billion in short positions at risk if Bitcoin's price breaches $115,000. Current market conditions, bolstered by improving U.S. macroeconomic indicators, have created a favorable environment for Bitcoin's ascent. The National Financial Conditions Index, which reflects stress levels in the financial system, has recently shifted towards looser conditions, encouraging risk-taking behaviors among investors. In addition to TMTG's announcement, Block, previously known as Square, has launched a pilot program enabling real-time Bitcoin payments at a pop-up store in Las Vegas. This initiative, which utilizes the Lightning Network for faster transactions, aims to position Bitcoin as a practical medium of exchange rather than merely a speculative asset. "We believe that the internet needs a native currency, and that's where all our focus has been today," stated Miles Suter, Block's Bitcoin product lead. With plans to expand this service to millions of merchants by 2026, Block is pushing the envelope in making Bitcoin accessible for everyday transactions. Amid these developments, BlackRock's Bitcoin Trust has also made headlines, reporting 30 consecutive days of inflows that resulted in the purchase of 22,419 Bitcoin valued at approximately $2.46 billion. This growing institutional interest underscores a significant shift in the financial landscape as major financial players increasingly recognize Bitcoin's potential as a legitimate asset. As the landscape of cryptocurrency continues to evolve, TMTG's Bitcoin treasury plan, coupled with initiatives like Block's real-time payment system, signals a pivotal moment in the integration of digital currencies into mainstream finance. The potential ramifications of these developments are substantial, suggesting a future where Bitcoin could not only serve as a store of value but also facilitate everyday transactions in a rapidly digitizing economy. As these trends evolve, stakeholders in both the corporate and cryptocurrency realms will need to navigate the challenges and opportunities presented by this new financial paradigm. In a bold move that underscores the growing intersection of politics and cryptocurrency, Trump Media and Technology Group TMTG, the parent company of the social media platform Truth Social, announced on May 27, 2025, its plans to raise $2.5 billion to establish a significant Bitcoin treasury. This ambitious initiative marks a pivotal shift for the company, which has been struggling to generate substantial revenue from its social media operations. The company plans to secure this funding through a dual approach, selling approximately 58 million shares to institutional investors for $1.5 billion alongside an additional $1 billion in convertible bonds. The shares are set to be sold at a price of $25.72 each, a move that could potentially dilute the value of existing shares, including those held by President Trump himself, who owns over 50% of TMTG. Following the announcement, TMTG's shares fell more than 10% during trading, reflecting investor concerns over the company's financial trajectory. As of now, TMTG has a market capitalization of just over $5 billion, yet it has reported significant losses, including a $32 million deficit in the last quarter alone. Devin Nunes, TMTG's CEO and a former congressman, stated, "We view Bitcoin as an apex instrument of financial freedom, and now Trump Media will hold cryptocurrency as a crucial part of our assets." This sentiment reflects a broader strategy to transition from a social media company into a financial services provider, a shift that has been gaining momentum within the organization. Nunes also emphasized that the Bitcoin treasury would serve as a hedge against the financial discrimination faced by many firms. a nod to the increasing scrutiny of businesses by financial institutions. The announcement of this Bitcoin treasury aligns with a trend that has seen various corporations and even governments exploring cryptocurrency as a financial asset. TMTG's commitment to Bitcoin is reminiscent of strategies employed by companies like MicroStrategy, which have adopted similar approaches to cash management by heavily investing in digital assets. With Bitcoin currently trading near an all-time high, this investment could position TMTG as one of the largest corporate holders of Bitcoin, behind only a few key players in the market. As Trump media ventures deeper into the cryptocurrency space, it is not without precedent. The company has previously partnered with Crypto.com to launch several exchange-traded funds ETFs aimed at providing investors access to the price movements of cryptocurrencies. This further illustrates TMTG's strategy to diversify its revenue sources beyond traditional advertising, which has been underwhelming for the company. Despite its ambitious plans, TMTG faces challenges. The company has generated only a few $1 million in advertising revenue since its inception, and many analysts view its pivot to cryptocurrency as an indication of desperation rather than a well-thought-out growth strategy. Mike Steegemaler, a finance professor at Baylor University, commented, "This does not look like a high-growth social media platform," suggesting that TMTG might be losing sight of its original mission. Moreover, Trump's personal involvement in cryptocurrency has deepened, with reports indicating he has added billions to his fortune through digital assets since returning to office. His administration has taken steps to foster a more favorable environment for cryptocurrencies, contrasting sharply with the stance of the Biden administration. As TMTG moves forward with its plans, the implications for both the company and the cryptocurrency market will be closely watched. The establishment of a Bitcoin treasury not only indicates a significant shift in TMTG's business strategy, but also highlights the increasingly blurred lines between politics and the burgeoning digital asset economy. Looking ahead, the success of this initiative could set a precedent for other companies exploring similar financial avenues, reshaping the landscape of corporate investment in cryptocurrency. Ethereum is once again in the spotlight as its price movements suggest the onset of an alt season, a period when altcoins typically rally significantly. Currently priced around $2,669, Ethereum ETH has reclaimed a crucial technical level that has historically heralded substantial price increases. This resurgence comes on the heels of a notable market shift that could see ETH eyeing a price target of $4,100. Reminiscent of previous breakout phases that have occurred in past market cycles, the recent bullish behavior of ETH follows its closure above the midline of the Gaussian channel, a significant indicator for tracking long-term price momentum. Historical data shows that similar breakouts have led to explosive rallies, such as the climb from $400 to over $4,800 between 2020 and 2021. A similar pattern unfolded in late 2023 when ETH surged from below $1,500 to nearly $4,000 within a year. Currently, analysts are keenly observing the upper band of the Gaussian channel, positioned near $3,200 as a critical resistance level. A breakout beyond this could pave the way for ETH to reach its previous cycle high of $4,100 by July. Market analyst Mustache noted that the momentum generated by Ethereum's price rally could also invigorate the broader altcoin market. He referenced a historical pattern where the combined market cap of altcoins surged by over 1,400% following ETH's rise above the Gaussian midline in July 2020. A similar reaction occurred after a midline breakout in November 2023, suggesting that the current market conditions may lead to another significant alt season. However, amidst the bullish indicators, caution remains necessary. Approximately $123 billion worth of ETH is held by investors who bought during a price range of $2,300 to $2,500. Should ETH's price dip below this threshold, many holders would find themselves at a loss, raising the specter of panic selling that could negatively impact the market. This scenario underscores the fragility of ETH's current position as its support remains shallow until it can distance itself from this cost basis. The recent surge in Ethereum's price has not gone unnoticed by institutional investors. Spot Ethereum ETFs have seen significant inflows, with BlackRock's ETHA leading the charge with $136.4 million in weekly inflows. This institutional interest is a clear indicator of growing market confidence even as retail participation remains relatively subdued. Technical analysis highlights a critical resistance zone between $2,650 and $2,745 where many previously invested market participants may seek to exit at break-even. Analysts are watching closely as ETH's recent breakout from a descending triangle pattern suggests the possibility of further gains if momentum continues to build. As Ethereum navigates this pivotal moment, its trajectory could potentially reshape the landscape of the cryptocurrency market. With the backdrop of the upcoming Bitcoin having historical trends suggest a possible decline in Bitcoin dominance could trigger a renewed altcoin rally in the coming months. The convergence of these factors paints a compelling picture for Ethereum and the altcoin market at large, inviting both optimism and caution as traders prepare for what lies ahead. In a significant development for cryptocurrency users, MetaMask has announced its integration of Solana support, allowing users to manage, transfer, and swap Solana-based tokens directly through the popular Ethereum wallet. This update, designated as version 12.18, marks a pivotal moment for MetaMask, which has long been synonymous with Ethereum-centric transactions. As the crypto ecosystem continues to evolve, the addition of Solana reflects a growing demand for multi-chain capabilities within digital wallets. MetaMask's announcement, shared on social media platform X, highlights that users can now send, receive, and interact with Solana decentralized applications (dApps) using the same familiar interface. This integration allows for seamless cryptocurrency bridging between Ethereum and Solana, enhancing user experience and accessibility. Our goal is to empower users to navigate a multi-chain world effortlessly, stated a MetaMask representative. The wallet's reputation for robust security remains intact, with the same high-level protections extended to Solana transactions, including real-time alerts and malicious dApp detection. Interestingly, this integration comes at a time when Solana's status in the crypto market is under scrutiny. A recent report from Standard Chartered posits that Solana may be transitioning into a one-trick pony, primarily catering to memecoin trading. The report suggests that while Solana has excelled in providing high-volume, low-cost transaction solutions, much of its current activity is concentrated in the volatile memecoin sector. Standard Chartered's analysis indicates that the peak of memecoin trading is behind us, warning that as trading volumes decline, Solana may face challenges in maintaining its momentum. According to the bank, so far this has been mostly in memecoin trading, which accounts for the majority of activity on Solana. This over-reliance on a single niche has led to concerns that Solana's scalability will be tested as it seeks to diversify into more stable sectors such as financial applications or social media platforms. The bank's report anticipates Solana will likely underperform compared to Ethereum over the next 2 to 3 years, reflecting a need for strategic evolution within its operational framework. MetaMask's support for Solana comes as the blockchain network struggles to retain its competitive edge against Ethereum and its Layer 2 solutions, which have significantly improved transaction efficiency and cost-effectiveness post the Denkin upgrade. Standard Chartered notes that this modular approach has enabled Ethereum to scale transactions while maintaining decentralization, further complicating Solana's position as the go-to for inexpensive, high-throughput transactions. Amid these challenges, the integration of Solana into MetaMask could provide a much-needed boost to its user base and utility. Solana currently ranks as the 6th largest cryptocurrency by market capitalization, valued at approximately $93 billion. By facilitating easier access through a widely used wallet, MetaMask is positioning itself as a leader in the multi-chain wallet space, which could enhance engagement with Solana and potentially revive interest in its broader applications. Looking ahead, the upcoming addition of Bitcoin support to MetaMask later this year further underscores the wallet's commitment to expanding its multi-chain capabilities, positioning itself as a central hub for cryptocurrency management. As the landscape of digital assets continues to shift, the convergence of wallets like MetaMask with various blockchain networks will likely shape the future of user engagement and transaction dynamics in the cryptocurrency space. The developments surrounding Solana and MetaMask will certainly be worth monitoring as both entities navigate the complexities of an evolving market.